activities such as zoning, etc. So, but going to the, these investments, in addition to those investments, government needs to absorb the impact of hurricanes, floods, many other type of catastrophes, and because of climate change, the intensity and frequency of these events are increasing. So going to a sovereign and risk management approach for small events, the recommendation usually is, in addition to the investment that I mentioned, is to set aside budgetary allocations or reserve funds, and to manage these small events in terms of the fiscal impact that they cause in governments. In addition to that, on the top, you will see two other layers. One could be there will cover medium impact events. This medium level layer, one way to cover is through risk retention instruments such as contingent loans. And I will refer to one of the products that the bank is offering and helping governments to close the gap. And the next layer are for extreme events, low probability, high impact in terms of the fiscal consequences on countries. Of course, when I'm talking to fiscal, but also in the economy and the social impact on the countries. So, and for that layer, risk transfer instruments are key. And we will see in two examples how governments are starting changing the approach. Before, for many years, in Latin America and the Caribbean governments, they focus more on an exposed approach, just wait until a disaster happen, and then they try to mobilize resources exposed to cover the needs they face. Here is an ex-ante approach. Transferring risk to the market is key. We will see in the cases that I will comment, how governments like Bahamas or Nicaragua, they are doing that, and they are starting doing other countries in the region. Moving forward with the next slides, I will give you, within this integrated approach, the IADB is working with many countries in Latin America and the Caribbean, not only in the technical support side, but also through instruments. The contingent loan is one, it's a risk retention instrument that we believe help to governments not only just to have available resources right after they are impacted by a disaster, but also promote risk transfer instruments. As I mentioned before, we need to structure a strategy without gaps within the different layers. So usually insurance, based on the probability, we try to cover a layer with high probability of occurrence. The pricing will be high, so sometimes the affordability is an issue when we have a small countries with very tiny fiscal situations. As I said, this is an ex-ante instrument, so the governments ask the bank to approve these loans before something happen. This is part of the planning. So approve the loan. We also require them to have a more public integrated approach to the risk management and climate change. So we have conditions, and we work with them also with technical support to improve risk retention, risk analysis, also improve or foster investment in resilience, also the capabilities of the government to be prepared for an emergency response, and finally the financial risk management strategy. And you can see also the bank in the slide, in the part of risk transfer, we are supporting and also helping in this approach governments to access different initiatives or instruments that are already in the market. For instance, the Caribbean and Central America, the CRIF is one of the vehicles available. Other countries are using cat bonds like the Pacific Alliance countries like Colombia, Peru, Chile, Mexico. They put together, different cat bonds to transfer part of the risk within these strategies. And the bank is trying to also move forward, helping governments through a catastrophe risk protection program that we are promoting recently. Let me just mention quickly the innovation of this instrument. This instrument is a parametric instrument. It's not a regular contingent loan that it's triggered based on emergency declaration like other instruments. This is a parametric trigger. We wanted to introduce this innovation to allow, to be precise in the term of the layer that we want to cover with this instrument. So as I mentioned before, we don't want to cover high probability events because we believe that the government needs to invest more in prevention and mitigation and resilience to reduce that needs, and also they need also to set aside in the budget or reserve funds some resources to cover these needs. So we want to make sure that we are covering the middle layer, and also we want that there is not gap between our layer of coverage with the risk transfer instrument that the governments are paying for. As you see, I am not planning to talk about parametric here in details, but our resources from these loans are going to the first phase, which is right after the event, impact the country. So there are needs to assist the population affected, also public services, reconnection, rehabilitation of transport and energy sectors. So we want to really provide quick access to the resources. And the triggers are based in intensity of the events. For instance, hurricane category 1, 2, 3, 4, then number of population affected to that intensity. And we are using typically information from NOAA, NASA, and the European Space Program. Just a quick overview of our portfolio. So we are working with 17 countries. You can see in the presentation in South America, Central America, in the Caribbean. So mostly of the small and vulnerable countries in the region are covered through one of these instruments. And as I mentioned,
Juan Jose, you went on mute. Okay, Juan Jose, we hear you now again.
Great. So, and as I mentioned, so main perils we are covering are mostly climate related, so hurricanes, drought, floods. Let me quickly go to the next slide. Just this is to give you an idea how we are supporting countries in the financial strategy in Latin America and the Caribbean region. And I want to spend my last minutes in this presentation presenting two cases. One is the Bahamas. As you know, many of you know, in 2019, Hurricane Dorian affected the country. It made landfall as Category 5 in the Abaco Islands. Afterward, the storm moved westward towards the Grand Bahamas at a very slow speed. So it stayed like 2 days. And the damage was really high, a lot of heavy rainfall, extreme winds, and a strong storm surge affected the country. Estimations that we conduct with the Economic Commission for Latin America and the Caribbean, ECLAC, estimated loss and damage about $3.4 billion, approximately 25% of the GDP. So it triggers, the country as part of the financial risk management strategy they have one IADB contingent loan that was triggered for up to $100 million. I will explain a bit more how they use it and how it works with insurance also. Let me go quickly also to comment a little bit just about Nicaragua. As Paula mentioned in the introduction of the panel, so last year was a really bad year for Central America. The region was affected by two hurricanes, Hurricane Category 4, Eta and Iota, and those hurricanes affected Nicaragua in the North Caribbean coast of Nicaragua, where mostly of the indigenous population and the poor population in the country are located. So and the difference between the two hurricanes was most about 2 weeks. So first was Eta and then Iota, so and mostly in the same location. The estimations of damage and losses were $742 million according to government estimations, which represents 6.2% of the GDP. Let me now go to the next slide so that I can comment on the strategy they have in place for these two events in these two countries. So as you can see the presentation, I mean, both governments, they have some allocations within the budget and reserve funds to cover part of the needs. And both governments, they have IADB contingent loans that were triggered based in the parametric model. So one, in the case of Bahamas, $80 million we dispersed to support different sectors, humanitarian assistance, energy, cleanup, water supply, and others. And then also trigger a Caribbean catastrophe risk facility. I hope I mentioned correctly. Risk insurance facility, the CRIF. So for $12.8 million. So the government, they were allowed to have, in addition to their own resources, this funding coming from these two instruments. Of course, our instrument is a debt and the other is an insurance. They pay a premium and they got this money. In the case of Nicaragua, the same situation. So the government, they have some allocation of resources available, and then also triggered $35 million from the IADB contingent loan. And in addition to CRIF, they pay out $30.6 million. Here, I think this is a very practical example of how it works, the approach that the bank is promoting in the countries. Very specific to, unfortunately, events that very recently in the last 2 years. And the thing here, some concluding remarks to complete my presentation are, this is the way to go. There are many countries right now looking to develop this strategy, but still, if you take into consideration the loss and damage estimations, this is a very small portion of the financial needs the country will confront, and usually over time they will need to finance the reconstruction phase, economic impact and support population in different economic sectors. In the case of Bahamas, if we recall, the estimation was $3.6 billion, and we are talking here about a small piece of resources available for the government just for the first phase of response. But there is a gap. We need to still work more with the countries. I think the risk transfer instruments are a key instrument within these strategies. I believe that the IADB contingent will help in get the country more familiar with these parametric instruments, and also they are easier sometimes to make a decision from the government officials to include it with the strategy, but also I believe that help to engage them from the technical side to explain how insurance and risk transfer instrument works, so that in the future we can see our region with more coverage, with more protection to be able to confront this reality. Thank you very much.
Thank you for that, Juan. And indeed, the awareness about the risk and the different solutions that are available is so key. And it takes so long to develop this awareness, this understanding, and the public-private partnerships that can come up from better understanding embedded into holistic resilience strategies are keys. And speaking of one of those type of collaboration, PPPs across the region that have addressed vulnerable populations via tailored solutions on the parametric insurance side. Carlos Pelsterli, it's a pleasure having you here today. So Mr. Carlos Pelsterli worked for more than 2 decades in the reinsurance sector at Swiss Re. And then he decided to walk the talk. And he became the CEO of the Microinsurance Catastrophe Risk Organization, MICRO. MICRO is an entity specialized in inclusive insurance, and it is committed to maximizing the social impact in a financially sound manner. So MICRO focuses on designing and implementing index-based insurance solutions that protect directly or indirectly the underserved populations against natural disasters. In this session today with Carlos, we're going to learn about MICRO. Carlos is going to present the product launched in Colombia in a joint effort with SBS Seguros Colombia, an insurance company, and Banca Mia, a bank from the Microfinance Foundation, BBVA. The product launched in 2019, and it was specifically designed to strengthen the resilience of vulnerable and low-income facilities. The project received a grant from the Insure Resilience Solutions Fund, and we're going to hear all about it. So Carlos, the floor is yours.
Hola, Paula. Thank you very much for the introduction. So parametric micro insurance, yes, we can. Probably something familiar to all of you with small children, and it very much sums up the main takeaway from the presentation. But let me just start saying a few words about MICRO. Paula, you already made a bit of an introduction, but MICRO is an entity that was born after the earthquake in Haiti. You probably remember 2010, devastating pictures, and insurance couldn't be seen anywhere, something that repeats itself all the time. And so a few entities came together, public, private, and said, let's do something about it. Let's do something focused on natural catastrophes to really address the needs so that next time, hopefully, we're present in some way, trying to take on the risks that they are facing right now and cannot really afford to face. So MICRO was born with that mandate to bring that kind of solutions protection to the most vulnerable. And so MICRO by now, after 10 years, has become a specialized entity, specialized in the design and implementation of inclusive parametric insurance against natural disasters. We're currently active in Latin America. Nevertheless, unfortunately, I have to say the problem that we try to help solving is not exclusive to Latin America. So hopefully in the near future, we can also expand to other regions in the world. Okay, so as I said, MICRO specializes on parametric insurance. Why parametric? Why don't we do the traditional kind of business? And the simple answer is with traditional products, methods, and so on, those are actually the ones explaining the low penetration of the insurance. There are hurdles that are not easy to overcome with traditional methods, so we had to reinvent the way we do things. First, by understanding what are the real needs of that population, because it's sometimes looked over, not really understanding, trying to bring a solution that is not needed, but then afterwards to rethink the business in order to reach remote areas with something that is relevant, that really adds value to that population. Nevertheless, I have to say it's not a silver bullet solution. There are some requirements. The products need to be of good quality, and here are like 3 aspects that to pay real big attention to before deploying this kind of products, especially for that very vulnerable segment of the population. One is about the design of the index itself. It needs to be adequate. What does it mean? It needs to address relevant risks. The indices have to have a high correlation with the insurable interest, whatever it is. and they have to solve something which is unsolvable because it's contradictory. It needs to be affordable, but at the same time appealing. So a compromise needs to be there, and probably a roadmap as to how to evolve over time. Insurable interest needs to be very clearly defined. What is it exactly that we are protecting with those indices? And of course, that insurable interest needs to be exposed to the risks, the kind of events that we cover that get triggered through the indices. And last but not least, probably one of the most important ones, consumer protection. Need to manage very well expectations with all kinds of tools. We want that to be a constant, responsible sale. We want to impact individuals' behaviors. We want them to know that they're covered, but also we want them to know what they're not covered for. If not, it bounces back to us. That needs to be accompanied by a good client service, by our local partners, of course, good client support. And then on the operational side, we need to maximize the advantage of parametric products in the form of very rapid payouts. So those are like just summarize something that I would say is necessary to think about good quality of indices. In our case, how does it work? There are like 3 phases. The initial one is the one summarizing everything I just mentioned, putting together, designing, really knowing the segment you want to serve with your product, knowing the needs, and trying to design something that is relevant, adequate, affordable, that can be distributed, etc. So that's all that phase. Once you have the product, you launch it to the market. Then our calculation, we have our own calculation platform that is like the heart of the product, extracting data to feed those indices and see if the parameters in the policy get triggered. If they get triggered, then that platform, makeup, we call it, issues automatically loss reports to the insurance company. The insurance company identifies the clients in that zone, that location that was impacted, sees what's the insurance, the sum insured of the individuals, apply the percentage that the calculation platform is telling them to pay, and proceeds with the payout. This is and informs, of course, the client, because it's not the client filing a claim, but it's more the insurance company, thanks to the indices noticing something bad happens where my insured is, and so the payout gets triggered the other way around. So the client needs to be informed, letting him know, we noticed something bad happened there, we just credited so-and-so dollars into your account. So that's the way how it works. And now to the Colombia case, which is the one that I would like to present here a bit in numbers. As Paula already said, it's a collaboration of Banca Mía, of the BBVA Foundation in Spain. They are leaders in microcredits in Colombia. SPS, who have also developed very nice product for the vulnerable low-income segment of the population, and operational efficiency, which makes them a very interesting partner for these kind of projects. And ourselves, who help them put the whole thing together. The product is called Mi Inversión Protegida, and actually it's now the 2nd birthday. It's been 2 years now in the market. It has 2 components, one traditional with some traditional covers where the client still has to file a claim, and the one that we developed in cooperation with the Insur Resilience and our local partners is more the parametric element. That one covers excess rain, drought, and earthquake. And as I said before, well, there is no need to file a claim, so no formalities, no exclusions, no surprises, and it makes payments very quickly. We're going to see that in a minute, what has been the record to date. So here a few numbers so that you get a bit more of a feel as to what we have done so far. With regards to sales, 11,500 active policies today, so it's in the 2nd year. Have to say last year, Banca Mía dropped insurance sales when the pandemic started. They focused completely on their credit portfolio. Sales went to 0, literally to 0. But as time moves and they realize now my clients are even more vulnerable, insurance is picking up again, and we're back to to very interesting levels. Right now we have 11,500 active policies with Banca Mia. The average premium is for $3.6 per month. Average sum insured $1,600. 48% women, something we're very happy about, and a third clients dedicated to rural agricultural activities. That was on the sales side. On the losses, I think I don't have this slide anymore, but maybe on the losses, interesting was something like 2,500 payouts have been triggered to date. Almost 20% of the clients have received at least one payout, which is very important to add a bit of tangibility to the product, because those are opportunities to explain again what the insurance is, how it works, and everything we are about to doing. Payouts that are in an average of $56, so quite happy about that. And maybe the most interesting part is the turnaround on the parametric payments have been 2 days. So from the moment the platform informs the insurance company till the insurance company credits the amount in the bank account of the insured, or whatever way has been decided, it takes only 2 days, as opposed to 15 days to the other more traditional side, but 15 days is still quite a good number. Here, with regards to consumer protection, very important, these are some of the tools that we develop each time with our local partners, making sure there's a sales manual that really trains the sales force to explain properly our products, respond questions, and have someone they can ask in case there is something they cannot explain. A client brochure which has more colors and figures and so on than small print. This is what the client actually takes with himself. On the wording side, we always try to simplify them as much as possible, but there are some boundaries, some limits to what we can do out of regulation. We help them also design video clips, very short video clips that explain the products, and then the SMS notifications every time there is a payout or something important needs to be transmitted to the clients. Here, with regards to monitoring, we're talking about parametric, so it's modeled losses, and since it's modeled, it's never perfect. It always can be improved as better data becomes available, better methodologies to model the losses becomes available. But for that, you have to very closely monitor the products. Are they triggering when they should, in the quantity they should, and so on. And so we very closely follow the performance of our product with frequent reports, monitoring not only sales and losses and composition of the portfolio, but also the index reliability, seeing when it triggers a significant payout, we go and see on the field, there is something in the local news that sort of matches with the payout we just did, or something new that we're beginning to develop is scraping the web for words that are relevant for what we're doing. And so it could be something that is happening on the field, then we go back and see, okay, how did our product behave in that regard? Did it trigger, or would it have triggered, and so on. Okay, and this is the voice of the client in Spanish. Just wanted to tell you this is some statements from the bank. I was very interested to see, because for the bank it's a burden. It's selling something that is not familiar to them. So what's their motivation? What can we learn from them? Why are they interested? And there are a few points that they are expressing themselves as to why they're pushing, why they are making that extra effort. There are some that are more related to social responsibility, a bit linked to where they come from, but it's a social responsibility also linked to own interest. Of course, if their clients do well, they do well as well with the credits that they disperse. So it's a virtuous circle. And they like very much about the product, especially from the parametric component, the amount of losses. It's realizing, okay, insurance is not the most appealing, the most sexy product that you can bring to market. So making it a bit tangible in the beginning till it is understood and so on, it really helps. So the frequency of the payouts that we incorporated into that product and the fast turnaround is something they value very highly, plus the ability to reach out to clients that otherwise they would be completely with no coverage at all. Okay, I know we're running out of time, that's why sorry for talking a bit fast, but yeah, I pass it on to you, Paula. Thank you.
No, we're good on time. Thank you. And thank you for noting that. And going back to prior slide that you were presented, quite remarkable. I was reading and translating to English that Macamí here reported that between 2020 and the cap of June 2021, 6,272 covers were put in place. During the same period or time range, there were 2,364 claims, of which 80% were paid through the parametric cover within a maximum of 15 days. And that this cover has specifically helped a bigger proportion of the clients in rural areas, where usually the access has been quite difficult. So very interesting experiences to share, and I wanted to make sure that got translated in English as well for all of our attendees to the session. Thank you so very much, Catherine, Juan Jose, and Carlos. Super interesting. It looks like the word cloud option is fully functioning now. So Alex, and to the team supporting us in this session, can we put the word cloud on the screen for our attendees? And we will go back to the initial question at what are the main barriers that you have observed on the field for inclusive and innovative protections. Los invitamos nuevamente a utilizar el word cloud, que tendría que estar disponible ahora en su pantalla, para que nos puedan contar sus experiencias acerca de cuáles son las principales barreras para los seguros inclusivos e innovadores en la región. Vamos a darle un minuto. We're going to give it 1 minute for you all to please share your thoughts with us so we can see what are the main words. And if we can please write in English, si podemos por favor escribir en inglés, me avisan, porque la herramienta va a funcionar en inglés. Okay. Vamos a darle un minuto para que nos den sus opiniones en inglés, por favor. We're going to give it 1 more minute for you to give us your input in English, please. A ver si esto funciona. Let's see if it works. Estamos probando esta tecnología. Okay, I cannot see it. So is there a chance that we can show already the results on the shared screen? Before we go into Q&A, we would love to incorporate the responses. Let's see. Okay, so we can see, oh, there's 3 main items that show quite strongly affordability, financing, and regulation. Interestingly, I don't think we've touched too much on regulation. So let's incorporate those three into the Q&A. We're also seeing infrastructure, which we haven't necessarily addressed as well. Excellent. Okay. So if you have more, please keep it coming. Reinsurance capacity is showing up as well. Interesting. Very, very interesting. Well, thank you for all that input. I am tempted to jump right into that. But just to recap, then we learned about how the World Food Programme, the Interamerican Development Bank, and Micro have launched very different but complementary risk finances approaches. We've learned about how they have been implemented on the ground. Let's clarify that these are three approaches. Of course, there's many more interventions in the region. And when we present all of these examples, we're really aiming at sparking the light and ideas on possible collaborations in order to scale up and bring innovation together, again, in complementing manner, but with the goal of making sure that we can scale up. So as some more results may come in on the word cloud, I'm going to turn back to the presenters. Speaking of scalability and looking at the results that came from the audience, regulation, financing, affordability. Now we're seeing trust, distribution, regulation. Catherine, I'm going to turn to you. How do we reach that scale needed for sustainability?
Thank you, Paula. And it's a very big question. And I mean, I tend to be quite optimistic in our, or ambitious in our attempts to achieve that. Like I said before, we really still lack a lot of examples of scalability and sustainability for these types of instruments. But I do believe it is possible. And I mean, even through the work that we've been doing over the past the past couple of years in Latin America and the Caribbean, we've already been identifying, you know, really some of the opportunities for scalability and sustainability. I mean, I think, you know, one of the biggest, and I mean, we've only got small numbers this year with the countries that we supported, and we've got 3 products in the region that have already been launched and others on the way in different countries. But whilst what we've learned is, yes, we can't scale immediately. We do need to get the products right, and that links to the topic of trust that has also been raised in the word cloud. Is we don't want to basically put something out there to a large audience if the products are going to create a distrust in how they can serve populations. So we have to get that right, and a lot of that is also making sure that we've got good data and evidence to continue to improve these products. But that data and evidence that we are also looking at is really also important for looking at scalability aspects and addressing things like affordability. One of the things that we want to look at going into 2022 is how do we make these insurance products affordable and sustainable over the long term, both for governments and for people on the ground, for cooperatives and the you know, the groups that we're working with. This is, I think, is still a big challenge. We see opportunities, for example, in how can we bring together more like of a smarter subsidy program where there are different blended approaches to addressing these types of affordability issues. How can we perhaps just segment out different populations, for example, where some are more able to pay and others are not? But we really need to look at that, and also looking at the broader risk layering approaches as to, are some instruments better or not for certain populations. And it's really hard for really food insecure and vulnerable populations. That's something that we have to seriously look at. And And another scalability aspect for us, I think, is the opportunity with social protection systems. Social protection systems, you know, really can reach large segments of a population, and there is a major opportunity there to reach vulnerable populations through different types of cash transfers from using a range of different risk finance tools. So we do see that, and bringing into that is also then the partnerships, and we mentioned before public-private partnerships. This is key, and I feel, you know, there's been a lot of discussion around, especially in the climate change realm, public-private partnerships. But what does that actually mean? And I think insurance offers a real opportunity to actually genuinely look at that in a more in-depth way, because you've got insurance providers, reinsurers, you've got the government sector as well. And indeed, even there, I mean, we've got facilitators. I find often that's where WFP often comes in, is bringing different entities together and adding that inclusive element to making sure that the most vulnerable are considered in these products, but kind of enabling these discussions across different partners to really make available more affordable products, but also then, you know, and working with the government to ensure that the regulatory processes, so speaking on that on the word cloud as well, is working out how we can make sure and advocate that the regulatory processes are incentivizing the private sector to develop these tools, to develop more innovative tools, and that are going to reach the most vulnerable. So we need to keep that dialogue going, but I think it's key overall that partnerships are core. You've seen examples from 3 quite distinct and different organizations, but actually on this topic of disaster risk financing, there are so many complementarities, as you've also mentioned, and I think we, as a core group, have a lot more opportunities to partner together to really enable holistic risk finance programs that we can look at how we can also scale together with these different instruments. So that's just a few thoughts from my side. Thanks, Paula.
Thank you. That was a very rich response. Thank you for bringing all these concepts together. And you have touched on many of the feedback that we got from the audience. And Carlos, I would like to go to you next, building on Catherine's response. And you addressed how micro is building trust in your presentation quite in detail. So this trust also can be built based on an accompanying, and I'm going to go to the barriers that came from the audience, reinsurance capacity, infrastructure, reaching affordability, and also having regulation that Catherine was just mentioning in order to be able to bring innovations to life, really, to make them material. So given that you're active with micro in different countries, how do you manage this set of challenges, hopefully turned into opportunities in many cases, to adjust your programs and your solutions and keep that trust going, right?
Yeah, well, that's a good question that probably we could elaborate for hours, because it covers the whole complexity. But very simply said, what we have been trying to do is something very pragmatic. Not to solve all the problems, looking for the perfect solution, because it becomes unaffordable and brings lots of other issues, but how to help all the parties that need to be involved with change management. How do we, yes, we can, how do we bring that attitude? Let's do with change management. Let's do something, let's start with something, make first good experiences, and then complement it with additional covers and so on. But when we talk about affordability, scalability, that's very much hand in hand, of course. I try to think, when we're at Micro, thinking about product design, how do we make our products also more interesting, more pertinent, more relevant, so that the affordability issues are a bit less. And they are less because, well, final clients maybe are more willing to pay something for the premium, but also because we start activating other partners, indirect beneficiaries, like ONGs interested in the well-being of the population, governments or entities of any kind that could help also paying the premium because they see the benefits for what they're doing as well. So it's all interconnected, I would say. I see very big the regulation work. I have to say, in our own experience, it's been lengthy processes, but very positive processes by early involving regulators, letting very transparently, having a dialogue with them, letting them know what we're up to, what are the challenges, and very often they help us ourselves in the product design. So it's been a beautiful experience. And the same happens on the reinsurance side. It's something you have to grow slow, go together with partners who are aligned in the interest, in the double bottom line interest. In our case, it's been Swiss Re that has been instrumental in everything we are doing. But then as you manage to grow the business and there are certain methodologies which are more known, then it becomes easier because it becomes more certain and it's less of an issue. So I hate to say that it has to be patience, takes a long time, and the bad news is, yeah, it's true, it takes a long time. The good news is it's not that long time to justify bad results forever. No, in our case, I can already see our break even around the corner, so it is doable.
Thank you for that, Carlos. It's certainly very inspiring. I want to invite the audience to make any questions you may have. We are getting notes of some comments. And before going to Juan Jose, I want to make sure we're inviting you to send your questions via the public chat. So Juan Jose, I'm going to turn to you. You've heard about the challenges and how we're overcoming these barriers from the World Food Programme and micro. You are operating at a more sovereign macro level. How does it translate in the case of the IADB? And how do you see the role of the IADB in actually overcoming these barriers and making these protections more accessible by working with the sovereign sector? How does it trickle down? And how are you tackling this from the bank's role?
Thank you, Paula. Very interesting discussion among everyone in the session. I would say that I will add a couple more perspective to this discussion. I think, technical assistance to government is key. So we need to keep pushing and promoting that. And because, there are the expertise, we need to strengthen the institutional capacity within different part of the government. I am talking more at the sovereign level, right? Because then if we go down to the more at the micro level, we are talking more about different actors like insurance market regulators. But let me go a little bit more on the sovereign side. Because there are actors like the Ministry of Finance, central banks, other institutions that they make decisions to to transfer risk to the market. And we see during our presentations, there is a really gap that is still many challenges to try to get governments to use market-based solutions to basically to have a broader strategy and coverage. So strengthening institutional capacity is key. And giving an example, in the case of Peru, recently they participated with a cat bond together with other countries within the Pacific Alliance. But we engaged the government of Peru many years before. We helped them to create minimal capacity with the Ministry of Finance to be able to understand the main technical issues related to risk transfer instrument, how parametric works, and they created a risk management unit with the Ministry of Finance. So what I mean is there are investments with for to strengthen institutional capacity that they are needed in the region. Let me go to another area which is important. There were many participants in this session that they mentioned affordability, also regulation. Going to those specific issues, I think we need to keep pushing innovation to help to reduce transaction cost for governments, because this is also key. I mean, there's a perception in many cases that the insurance or risk transfer instruments, they are very expensive, but they need to understand what is expensive, what is not expensive, which is the goal of using them, which are your needs, and also try to reduce transaction costs to try to lower the premium and the cost. Going to regulation, I would bring an issue that based on our experience working with the industry and also with governments, is all the time something that could help to promote this instrument is more transparency. So more understanding, and for instance, when this calculation of premiums, there are different components within the premium. So just to be clear, what is a pure risk, where transaction costs component, which are the profitability, I mean the profit that the industry is looking around. So I mean, I think if the discussion between the governments and the industry is more straightforward, transparent, it will help to understand and to make decisions to increase, the market and to transfer more risk to, and be better prepared for the next events. And finally, we need to, another word that or issue that was raised by the audience was infrastructure. So what I said, I mean, this is, we cannot only talk about financial risk management. We need to have in mind that this is a broad approach or an integrated risk management framework. So as a bank or other banks like us, we're in a better position to combine and help governments to finance investment in resilience, but all together and also calculate which is the residual risk in order to be able to transfer that risk to the market. So it's a more integrated approach and view of the investment in areas like infrastructure to increase resilience, but also transferring the risk that for sure will be exposed and vulnerable for to events like hurricanes or floods. I will stop there. So thank you so much.
Thank you, Juan Jose, also for your very rich response. It's so interesting, and actually hearing you all discuss the approach from your own perspective, how truly it is complementary, and there's so many angles from which to approach it. We keep on justifying the need for public-private partnerships. Thank you so much, and thank you also, Walter, for joining us. Mr. Walter Hernandez, Agribusiness Program Officer for World Food Program out of El Salvador. Thank you so much for joining us now, Walter, and for accompanying us during this session. We would like to turn to you, as long as we can have you accompany us, for a question very much pertaining to the programs you are managing on the ground. I'm going to read it in English and then in Spanish. We're turning back to the field, working with people, implementing microinsurance products. So the question is, in order to bring products to the most vulnerable population, how does WFP in El Salvador identify the beneficiaries of your programs on the ground, and maybe liaising it with the barriers that we've been discussing? En español, Walter, muchísimas gracias por acompañarnos. Y refiriéndonos a, dado toda esta discusión sobre las barreras que se experimentan en terreno, en El Salvador, cuando ustedes diseñan los programas, ¿cómo identifican a los beneficiarios de los programas de microseguros? Y cómo esto toca en las barreras de acceso en términos de precio, regulación, transparencia, infraestructura, capacidad, todos los temas, confianza, los temas que hemos venido tratando como principales barreras. A usted, gracias por los comentarios.
Ok, muchas gracias, Paula. Bueno, el proyecto piloto de microseguros en El Salvador ha buscado integrar a las personas más vulnerables a nivel nacional, las personas de la última milla, como está en la estrategia, tanto en actividades productivas agrícolas como en otras actividades productivas, como emprendimientos y otros medios de vida alternativos. Y bueno, que en su mayoría estos no tienen acceso a un sistema financiero formal. El proyecto piloto se está desarrollando con diferentes grupos de personas vulnerables que ya estaban o que habían sido recientemente atendidos en los programas de PMA, en los programas comunes de PMA. Y entre estos grupos están, en primer lugar, bueno, no es en orden de prioridad, sino nada más para mencionarlos. En primer lugar, las personas participantes en programas de resiliencia y adaptación al cambio climático, que son personas que se encuentran ubicadas en una zona conocida como el corredor seco, en donde hay periodos de sequía más prolongados y más severos. Y a la vez son personas que viven en municipios que se han identificado que en El Salvador hay un alto nivel, un alto índice de pobreza. La actividad productiva principal de estas personas es la agricultura, una agricultura de subsistencia que, digamos, esto también nos hace entrar dentro de este grupo de personas que están en la última milla. Y en segundo lugar, el segundo grupo de personas vulnerables que hemos incorporado al piloto han sido emprendimientos, principalmente liderados por mujeres y por personas con discapacidad visual, que esos grupos también nos atendimos luego de la pandemia por COVID-19, buscando una reactivación económica de sus emprendimientos. Y en tercer lugar, un grupo grande de productores que también son productores de subsistencia, pero que están ya asociados, que están dentro de un grupo cooperativo y que actualmente estos tienen la posibilidad también ya de entrar quizás a un mercado un poco más formal. Eso, digamos, son los tres grupos grandes que están dentro del proyecto piloto. Y son personas, como decía, que no tienen un acceso al sistema financiero formal. Y de esa manera consideramos que se tiene un grupo diverso para hacer y para testear el seguro y contribuir a cerrar también la brecha y tener productos financieros más inclusivos.
Muchas gracias, Walter. Voy a intentar traducir al inglés su respuesta. As Mr. Walter was talking about the pilot project of WFPA in El Salvador. So the key has been to integrate societal segments that are vulnerable on the national level, really addressing the last mile, both on productive activities and alternative subsistence activities, the core being that most of this population does not have access to formal financial products. So the World Food Programme has focused on three groups. First one, population groups that are already being part of programs of resilience and adaptation to climate change. They're mostly based in the dry corridor in El Salvador, where the drought season is more severe, and they in general live in municipalities that are identified with or that are linked with levels of very low incomes. The principal activity is agriculture for subsistence at a subsistence level. Second group is a group focused on micro-entrepreneurship, mainly led by women and people with visual disabilities. This group has been targeted, especially during the COVID-19 pandemic, in order to help reactivate the local economy. And a third group of agricultural producers, both subsistence level, but that have been already grouped under cooperative movements and have access to a bit of a more formal market. So this has been the core group of population with which World Food Programme has tested the pilot, the insurance pilot in the region. Now we have 3 minutes to close, and it looks like there's no more questions from the audience. So if I could bring us to a closure here, thanking everyone who attended our session and sent questions, sent comments, filled out the word cloud, and thanking our panelists as well for your time and your detailed presentations today, sharing your experiences. I think as main conclusions, we've talked so much about public-private partnership. We've talked about collaborations in general, but we've talked also about complementary solutions. However, the barriers that are being faced seem not to be that dissimilar, from implementing pilots at the micro level all the way to interventions with the government sector. And certainly, there's quite some room to bring the knowledge that we gain via the supporting evidence and bring it together from the macro to the micro level, and making that knowledge available, and in order to leverage these experiences as we collaborate in partnership. So there's a need for coordination. We don't need to crowd out with instruments, but actually make sure they're complementing, that we learn from each other in order to go from pilots to scalability.